A deal on the controversial free trade pact has been reached. The United States and 11 other nations have agreed to the Trans-Pacific Partnership, which would open new markets to American companies. Michelle Caruso-Cabrera explains what that deal might mean for the U.S. economy.
In Atlanta today, trade representatives from 12 countries, all of them on either side of the Pacific Ocean, announcing a free trade agreement, which will remove tariffs and barriers on nearly all goods and services between the countries involved.
After more than 5 years of intensive negotiations, we have come to an agreement that will support jobs, drive sustainable growth, foster inclusive development, and promote innovation across the Asia-Pacific region.
If the deal is finally ratified, it will cover 40% of the world economy. China is not a member of the agreement. With an economy that is still relatively closed, economists think it would be difficult for them to meet the agreed standards. The agreement is controversial because it's been negotiated in secret and final details trickled out during the day. It's one of the reasons why Senator Marco Rubio, who is running for president, said today he wanted to read the agreement before he would decide whether or not to vote for it.
Well, we've got to see the details of it. I'm generally very much in favor of free trade. I explain to people all the time that the United States cannot get locked out of 95% of the world's consumers. I want to look and see how the trade agreement deals with non-tariff barriers to trade. I'm interested in those sorts of things. But the details of it are what we need to understand.
President Obama is likely to get more support from Republicans than Democrats, many of whom complain that free trade agreements don't do enough to protect American jobs and hurt labor rights abroad. U.S. Senator Bernie Sanders, who is running for president, called it a win for Wall Street and big corporations and vowed to do all he could to defeat the agreement.
One of the key sticking points was over a new class of drugs called biologics, which are made from living cells, include cancer drugs like Avastin, for example. Currently in the United States, biologics enjoy exclusivity for 12 years before a competitor can make a generic version. Under this agreement, that exclusivity will fall to 8 years, maybe as little as 5 years.
The Congressional Research Office says it's difficult to measure the economic impact on the United States, but almost all analysis suggest it will add to the U.S. economy, potentially as much as $35 billion annually to U.S. GDP. They acknowledge it could hurt the U.S. manufacturing sector, but could help the U.S. services sector significantly. For Nightly Business Report, Michelle Caruso-Cabrera.